session. I am so excited that you are joining us. I'll tell you what, we are building all week with all things real estate. And I want to remind you, if you missed yesterday's and you want the information, you can actually go out on the Billy Epperhart YouTube channel, and we've got it posted under a playlist that's listed as live. And we talked about how to maximize your house for selling and actually how to leverage that same information for buying. And today we are going to be talking about an update on the economic market of real estate. There's so much going on. There's a lot of information that's out there. And this amazing Wealth Builders coaching team is going to help you and I cut through it so that we can find the right deals. We can analyze our markets, understand what is going on. And so I just want to give a quick shout out to our coaches that are on. We've got Troy Peterson that's on. Troy, do you want to say hi to everybody?
Hi, everybody. Thanks for joining us tonight.
Great to have you, Troy. And then we've got Frank Pulley, who's actually going to be leading the discussion tonight. Frank?
Hey, everybody. Thanks for joining us. We have some great information for you tonight. So thanks for being here.
Awesome. And then Pastor Mike Davis, we just recorded the podcast today. We had so much fun. It's going to be so good. And Mike is going to take over the hosting for me because, as you can tell, I'm in the car and I'm going to be going into the Truth and Liberty session, the live cast today, and hosting that. So you are in great hands, and I'm going to turn it over to Mike Davis.
Oh, Karen, thank you so much. And what a wealth of information is on our team. I mean, Frank, Karen, Troy, and even the backup people. We got Renee, Gabriella, and all of the Wealth Builders family. We are blessed. And if you are interested, and I know you are, you wouldn't be watching this, we're having a workshop coming up October 13th through the 15th. It is jam-packed weekend full of real estate. Anything that you want to know about real estate, you need to come to this. And if you're interested in coming, you need to go to wealthbuilders.org/events, and you can punch in the code WB200 and get the discounted rate. I'm telling you, there's great things happening. And what a team that we have. Troy and Frank, are you guys ready to just tackle this? Frank, we're so excited about hearing this guy has a wealth of information. I know people don't know everything about him, but the guy is jam-packed. But you know what's special about Frank? He's like the father of all fathers. He wants to impart things that is in his heart, not just in his mind. He wants to impart things out of his heart into people. So we are ready, Frank, for an impartation today.
Mike, I love it when you go all pastor on us.
We're ready for it, brother. Go ahead.
All right, here, let me bring up my slideshow. And all right, can everybody see?
Yes, you're good.
Okay, great. So what we're going to talk about is how the real estate market is right now. And I'm going to go through this fairly quickly so we can answer some questions. This is kind of a culmination of stuff given to me by Karen, Mike, Troy, and myself. So, and most of this is fairly current. So let's do-si-do here. So, I mean, what's going on in the market? I mean, it could soften a little bit over the next few months. Remember, the real estate market is local. We've always said that. You want to look and see what's happening in your local area. You have to be aware of what makes a solid deal by educating yourself. There are deals out there. They're a little harder to find, but those that are educated know how to do it. You know, there's a lot of overly cautious investors. They're going to sit on the fence the next 6 to 12, 18 months or longer. And guess what? They're going to lose out. A good mentor can help you analyze deals. And yes, I am mentioning our Wealth Builders coaching program. It is valuable. That is one service we provide, along with many, many others, helping you get making sure you get into the right deal. We'll tell you if it's a bad deal. We'll tell you if it's a good deal, and we'll tell you if it's a bad deal, but could be a good deal, how to change that. And remember, as I said before, even in a soft decreasing market, there are deals to be had. You got to proceed with caution. So here's some ideas that are on thoughts that are on signs of a softening market. The days on market, as they get longer, We're out of multiple offers. You don't get as much interest on listings. Realtors and sellers are offering more buyers credits. In other words, they'll, credit you maybe $3,000 towards closing or something like that. I'm seeing a lot of price reductions right now, especially on the high end stuff. I was looking at a home for a student in Castle Pines, which is just north Colorado Boulevard or Colorado Springs and north south of us. And I was amazed at these high-end homes. They're decreasing the listings. Increase of housing inventory. Well, that's one we haven't had a lot of increase right yet. And we'll talk about that in just a minute. You have to keep abreast of market changes. Laws and regulations can change, and it's not just always the end of the year. And some of those can be federal, state, and especially local. Again, tax laws can change when a new administration comes in. Again, that's on federal, state, and local levels too. There can be local markets that run different from the norm. An example here is Washington Park. I've mentioned it several times in Colorado. It's kind of a nice little area, kind of it in itself, highly desired. Even when the market crashed in the middle 2000s, it kept their values. And again, you got to develop your real estate knowledge because education is the key to staying in this game. One of the things people forget to do is involve the Lord in their business. So pray daily for guidance and success. Philippians 4:6, do not be anxious about anything, but in everything by prayer and petition with thanksgiving, present your requests to God. Troy talks a lot about when he's looking for properties, he'll present his requests to God, and he asks that he claims those properties. I'll let him talk about that in just a little bit. So, Mike, I'm going to have you jump in here for this one, okay?
All right. Homes built in the United States by the decade. I remember when Billy showed this, I don't know if it was a couple of years ago or when it was, Frank, but this just like pulled the rug out from underneath me as far as you talk about having knowledge. I mean, you're talking about here, homes built in the United States by the decade. Why the shortage of houses and why does the demand continue? Listen, and from 1930 to 1939, there's 5.4 million homes built. All right. That's for that whole decade. And then you notice it jumped to 9.6 the next decade. And then it seems like it's a little bit leveling out, Frank. It was in the 20s, 21 million, 25 million, 25, 26, 27 million. But look what happened. You talk about a perfect storm as far as why we're seeing what we are seeing today. And from 2010 to 2019, we only had 5.8 million. Frank, that's almost the same as the 1930s. But here's the key. In the 1930s, the population of the United States was anywhere from 125, during that decade, 125, 130 million people for 5.4 million. Now we're at 5.8 million from 2010 to 2019, and we have 330 to 335 million. It's almost 3 times the people with the same amount of homes built. Yeah. You do not have to be a mathematician, do you, Frank?
No. And Mike, real quickly, I didn't put it on here, but you had a chart you've shown me before that shows appreciation real estate going back, 100 years?
Yes, about 75 to 100 years. This is a stat that everybody needs to know. For the last 100 years, now, of course, like we've seen appreciation in homes from 2020 just shoot up like Mount Everest. But you have to take all of the highs, all of the lows, and then that's what you get for an average, Frank. And so over the last 75 to 100 years, this is a great statistic for people who want to be involved in real estate. 5 to 6% appreciation every single year as far as the average. That means if you can hang on to it, from 10 to 12 years, your home could be close to doubling in value. And that's just going by a hard statistics, and people say, well, I don't want to take the gamble and getting into real estate. And I'm telling you, it's not much of a gamble if you got a track record that shows 5 to 6% increase of appreciation, Frank.
Awesome, Mike. Thank you so much for that. Let's talk about some nuggets on the current real estate market. All right. Here's a housing inventory outlook for September 2023. So that's pretty recent. Housing supply remains at near historic lows, especially entry level. And again, it props up demand and sustained those higher prices that we're still experiencing. Despite mortgage rates holding firm above 6.75% in July, I think it's a little higher than that right now. New home sales rose 4.4 to a seasonally adjusted annual rate of 714,000 compared to what it was in June. And again, thanks to escalating mortgage rates and still high home prices, this is a good one. Home seekers on a $3,000 monthly budget who could have afforded a $500,000 home can now only afford $429K today, according to Redfin. And this will increase the demand for rentals. This is according to Forbes Advisor. Just looked this up today, so it's very current. There's opportunities in new builds, though. Competition between new and existing homes may provide you some pricing opportunities. Did you know that 30% of all home sales are currently new construction? Competition on these new builds and ongoing projects can cause home builders to slow construction, but it's going to lower sales prices and possibly offer some more incentives. If you look around some of the new builds around you, they may be offering the lower sales price. Maybe they buy the interest rate down. Troy, you want to explain that really quick to everybody, the interest buy down?
Sure thing, Frank. That is a really good opportunity to get out there. So what these builders are doing is they've actually partnered with some of the preferred lenders, and with their lenders, they've padded into the price these big buy downs. And we're seeing new builds out there that are still offering 30-year fixed rates in the lower fours. So that's just something you can't compete with on the open market. And these new homes is a phenomenal opportunity. You think if you're getting in there for a living, my wife and I are kind of looking at new homes right now for us, and we love some of the communities and some of the options that are out there. But also, if you're looking at it from an investment standpoint, on a brand new property, you still got the builder's warranty. You're going to have very low maintenance for up to the first 10 years. And if you're getting locked in at a rate that's like 4.25%, that we've seen quite a few of these builders, then that's a beautiful thing. Now think about this. If you were to go shop a regular sale and you wanted to do a buy down on that loan to get it at 4.25%, it's going to cost you a lot of points. You could be an extra $10,000, $15,000 out of pocket just to buy that down. But these builders are wrapping that into the cost of the new home for you to make it a really sweet deal. It's something worth looking at today, right, Frank?
It is. And in addition to that, they may pay all or part of the closing costs. And I didn't put this on here, but a lot of times they'll offer like kitchen upgrades, bathroom upgrades at no charge. So it can be a sweet deal. With construction slowing slightly, the rental market should continue to hold steady and possibly rise. I'm going to have Troy talk about that here in just a few minutes. So be ready, Troy. So is it time to invest in new rental properties? Well, let's talk to the experts. Why this is Zillow. Despite the rise in interest rates this year, there's a strong demand for long-term rentals and vacation rentals, which we'll talk about in a little bit. Slightly dipping real estate prices and slowing sales in some areas are making it a little easier for potential landlords to buy rentals. I mean, that's good news for us. But again, it's only good news if you're not sitting on the fence. The pullback in stocks, the stock market's all over the place. I have some stocks. I believe in, diversifying, but I don't have a lot in stocks like I do in real estate because they're so crazy. And you can control your real estate somewhat by, fixing it up, rent it at the right amount, et cetera. You don't have any control over the stock market. So it's encouraging investors to pull out of the stock market and seek the returns elsewhere. And many of them are going to real estate. you got low employment, you got higher wages, you got qualified renters, and you got people that are qualifying to be landlords or first-time home buyers too. All right, Troy, I'm going to throw this at you and just get your take on it. What are you seeing right now, kind of in a general sense? I know, they're not rising drastically. I know that in some areas they've dipped a little bit, but what are you seeing? Because you're kind of the resident expert amongst us on this.
Yeah, I do watch rental rates quite a bit, especially running a property management company. So that's kind of the core of everything. I am seeing rents dip just a little bit, kind of across the board. So a little more in some areas than they are in others. But that's not going to be a continued trend. I've been doing real estate for 30 years. And Frank, Mike, I know you've watched the market. You know what happens with rents too. There's an interesting dynamic that happens with rents when the housing market softens. See, most people have the mindset that they don't want to buy a house if the value is going to go down. They don't care about the tax benefits. They don't care about the benefits of ownership. They're afraid they're going to lose value. And since most people won't buy an asset that's losing value, they actually pay rent for it. And that drives rents up while housing prices are coming down. So right now we see rents a little bit softening. That's a leading indicator to what will happen with the housing market as those prices soften. And then rents will rebound, and rents are going to stay very, very strong through this economy. I think it's going to be a great thing to be looking at.
Yeah. Mike, any thoughts on that?
Well, here in Pueblo, the rents are just holding steady. We've always said this, real estate is local. It's not the United States. Everything's happening the same. So you do have to look at your particular market. But as far as here in Pueblo, they are holding steady. They're not dipping. They're not really rising either. They're just holding steady.
All in a matter of knowing the market and being educated. Right, guys?
That's it.
That's it.
You do have competition now, all right? Other investors that are buying on a large scale and large corporations. These large scale investors bought nearly a quarter of all the single family homes that were sold last year. And it often drives up the rents for families in those areas. When they buy a whole bunch, they've kind of got a monopoly. Now, unfortunately, many of these large investing companies have woke beliefs. Am I correct in saying that, you guys? Yeah. Yeah, I mean, they're not looking at the body of Christ for guidance on these. They're just looking for the almighty dollar.
There you go.
That's it. That's right.
So why wait? Okay, well, experts expect U.S. housing market conditions to shift in favor of buyers by the end of 2023. And I don't think it's going to happen that soon. But again, there are opportunities when you know what to look for. Some investors are adopting a wait and see attitude. So they're not going to invest for the next year or two. And while that might be a good idea in principle, there will be, I guarantee you, rental property opportunities right now in just about every market. You just got to know what to look for. And again, so foreclosures were supposed to explode, but it's not like it was 20 years ago. Banks are trying to work with people. And they're doing everything they can. Yes, there are foreclosures, and yes, there's money to be made in foreclosures, but that is a chat for another day and another time. But they're not as prevalent as they were 20 years ago. And again, if they're sitting on the fence, that means somebody that's not competing for the same property you are getting to. Okay. And there's a lot of landlords that have what we call COVID fatigue, or tired landlords syndrome. They want to get out of the market and they want to sell their portfolios. This can actually be a good thing because a lot of these people don't want to just sell one. They may want to sell two or three. Have you experienced that at all, Troy, with your with some of your clients or just in buying properties?
I have, Frank. In fact, one of my favorite seller types is the tired landlord. They're more likely to get creative with financing, do owner carries. They still have the desire for cash flow, but they want to play with tenants. And yeah, as they do retire, they will bundle their whole portfolio and sell it off all at once. So yeah, you're right. It's a great opportunity.
Cool. And as interest rates continue to rise, we just talked about it, some home buyers are going to be priced out of the market, at least temporarily. They got to live somewhere. They're going to become renters. Strong demands for rentals and slowdown of new construction should keep those rents rising. Again, not necessarily overnight, not necessarily right now. We may have some dips, but eventually, just like Mike said, on property values over the years, they're going to go up. And it's the gift that keeps on giving.
Yes.
Mixed use buildings. Well, that's a nice, these are the properties that have like stores on the first level. Some of them have offices on the second floor, and above there are apartments. And millennials love those right now, and it's a good place. And I'm not saying that in a bad way, but there's a high demand for mixed use properties. It tends to be, when it comes to commercial real estate, a less risky investment, and it's safer because you're diversifying across several types of properties. Again, you've got tenants in the bottom that are retail stores, possibly some offices, and then of course apartments. By not putting all your eggs in one basket, you don't lose as much income if you lose a tenant. I mean, that's what's so good about multifamily properties. If I got a single family home and I lose the tenant, I'm 100% vacant. If I'm in a duplex and I lose a tenant, I'm 50%, and so on and so forth. Commercial real estate. Real estate market has proven to be a reliable and successful wealth building tool for investors in recent years. Is expected to continue its growth in 2022 and beyond. And so, Troy, you want to talk about these triple net leases that are just like the gift that keeps on giving to the golden goose?
Oh, a triple net lease is you're so right, Frank. Just a beautiful thing when it comes to commercial. We compare that real quick to residential, because with residential, your tenant moves in, you still got to take care of your basic systems, make sure your appliance work, the roof doesn't leak. You still got to take care of the property. But when it comes to a commercial real estate building, you can do what's called a triple net lease, as Frank just pointed out. And that means you can charge your commercial tenant so much per square foot for the year, plus the triple net means they're paying a prorated share of your common area maintenance, the property taxes, and the insurance. So if they're paying a share into your common area maintenance, your taxes and your insurance, you really don't have a whole lot of expenses on that property at the end of the year because your tenants are paying for it all. It is absolutely a beautiful thing, right, Frank?
It is. And again, demand for offices is starting to grow again, and demand for storage and warehouse space is huge. Now, offices, it's very local. In Denver, office space is not that great right now, except the smaller offices, smaller office buildings, 5-6 stories. The huge office buildings, they're trying to do different things for them. They've actually put some aside for homeless apartments. Some are condominiumizing them, etc. But I'm telling you, storage, self-storage, and warehouse space just about throughout the country is huge right now. Let's talk about vacation rentals. And this is kind of Karen's wheelhouse, but again, the vacation rental market is supposed to reach 107+ billion by 2028. And again, thanks to all these websites like, Airbnb, AirDNA, etc., and increased interest in convenience and affordability. So, I went to Grand Junction here for a service here, I don't know, about a month or so ago. And I was going to stay at a hotel, but my adult kids were with us. And I thought, I told them I would pay for everything, but we got a better deal on an Airbnb. And I'm telling you, it was a lot nicer for all of us than, 3 different hotel rooms. It was great. Take a look at this. I'm telling you what, this is currently and where it's anticipated to go, but you got to make sure you check your local laws and regulations. Mike, anything on the local laws and regulations on Airbnb short-term rentals?
No, well, the thing is, it's different per city. So you definitely need to check it out. They're like in the city limits of Denver. If I'm correct, Frank, you can correct me, but you can't even do vacation rentals inside the city limits anymore. Am I correct on that?
Yeah, you're grandfathered in if you have one, but you can't do it anymore. Yeah, pretty crazy. Troy, what about in Florida? Same thing. It's kind of here, there, and everywhere, depending on the regulations?
Yeah, it really varies by municipality. We've got some cities here that have no restrictions. We've got others that have restrictions. And so you really have to kind of know exactly what your area is and what they will or will not allow. I do know people, I've got clients right now that are actually petitioning the city to change so they can do more short-term rentals because it's a high demand vacation area. So you just really need to get familiar with your local ordinances.
I'm really excited because the three of us and Karen are meeting all of our advanced coaching, real estate coaching students out in Florida starting tomorrow. So any of the stuff that we're going to be sending to you is going to come in via Florida, and we're going to get a chance to, Troy, give us the 30-second version of what we're going to be doing in the next 3 days.
Oh yeah, this is our boots on the ground event where we're actually taking people around and looking at a variety of different properties. So everybody who came, or who's coming, they were given a little bit of homework. So we've got a list of properties to look up. We're going to go view the properties. We're going to look at what we need to see on those. What are the 5 major items you need to consider? We're going to learn how to analyze those properties from a long-term, a short-term rental, and a fix and flip perspective. It's going to be a lot of fun as we see the different markets. I can't wait to really get our feet into these properties with everybody. It's going to be a whole lot of fun.
Yes.
Mike's going to be good to be in Florida for a few days, won't it?
Yes, it will. Of course, it feels like Florida here in Pueblo.
It's sure the same here too, man.
80s. Oh my gosh.
So let's talk about interest rates. Got a few nuggets on interest rates that we just put in here as of today. Okay. Rates are expected to soften in late 2024. So they were expected to soften in 2023. Don't think that's going to happen. But again, we'll talk about the Fed's decided not to up the interest rate right now. But you know what? Number 2, use your formulas and parameters to make successful deals. You got to build your payment in and your interest rates into what you're figuring on a deal. And honestly, Troy and I have been around the block a couple of times on this. And back in the early 2000s, 6, 7, 8% for an investor property was pretty normal, wasn't it?
That was very normal. Hey, I just closed on a refinance on one of my rental properties, and I'm 8.625, and it still cash flows really well. I've got a second refinance working that's going to be a little close to 9 because it's a investor loan, but it still works. Don't let rates scare you. It just creates an opportunity if you do the deal right.
It's really important to know that you're educated, and I don't want to pound that into you, but it's so important because it's all about numbers, but it's about the right numbers and how they come out to make you a profit and moving forward. It's not the numbers that you want to happen. Gosh, I spent too much on this property, so I got to get an extra 20 grand. Doesn't work that way, you guys. But if you go in with the right numbers, you should be able to come out whole. So how will the Fed's interest rate decision affect mortgage rates? That's a great question. Again, this is from Keith Gumbringer. He's with the mortgage website hsa.com, and says it's not really more about what they intend to do than what it does. And again, not meaningless. He's talking about this last quarter point hike, and then not doing anything recently won't change the big picture much, as a lot of damage from higher interest rates is either done or already in progress. But again, I think that, as long as you're taking those numbers into consideration, I think it's an opportunity. This is going to scare people off, less competition. So for a housing recovery to occur, he says there's several conditions must unfold. We'd like to see inventories of homes for sale turn considerably higher. There's not a lot of inventory right now. Again, people are either holding on to them or they're priced out of the market. So again, that's an opportunity. This additional inventory would ease the upward pressure on home prices. And again, it's supply and demand. Okay, if you got a few more homes for sale, then it's going to level them off or help them settle back again so they're not so outrageously priced. And of course, interest rates need to cool off, which, I don't think they're going to continue at this rate. Mike, what are your thoughts on this? I mean,
I think it's just like you said. Of course, the Feds this last meeting, they didn't raise them. It seems like they're going to raise them a quarter point before the end of the year. But you know what, Frank? This is the bottom line. It's not how high interest rates are going to go or what they are. Will this property cash flow? And to be honest with you, Frank, if they're 15% and I can still put $300, $400, $500 in my checking account every month, I mean, do I really care that they're 15% if I'm putting money in my account? Isn't that right?
Yeah, and when you refi them, when the interest rates do go down, you're going to make a lot more money.
Even more.
Month. Yeah.
Yep.
Tor, any take on this at all?
No, I agree completely. It really is an opportunity. If it scares other people out of the market, it creates an opportunity for us to come in, get a better price. And like Mike said, it's all about cash flow. And if you got positive cash flow, who cares what it costs? It's not the cost of the money, it's the availability. And you use that money to generate income. That's the law of leverage, as Billy calls it. And it's a great thing. So I agree. It is all about income. You're buying a piece of property, you're buying an income stream. It doesn't matter what it costs you. It matters how much income that comes in.
One of the things we really discourage people from doing in the coaching program is doing slim or negative cash flow deals. That's a good way to totally go underwater. Now, we do have a couple of our students that are making enough money with their jobs that they need a tax write-off. And so they're willing to accept a little less return on investment, like 6 or 8% versus 12%, in order to get those tax write-offs. But again, that's another story for another day. Okay, so how will they affect mortgage rates? Well, numbers say that they don't cool too quickly, because if they fall too quick, it could create a surge of demand that wipes away any inventory gains and causes home prices to rebound. So that could be a really big mess. Better that rate reductions happen at kind of a metered pace. And lenders aren't stupid anymore. They were stupid in the mid 2000s, but not anymore. They learned. Everybody got burned. And so they're going to, really try to influence the government to meter these down. So, okay. And again, he adds that mortgage rates returning to a more normal 4 to lower 5% would help the housing market over time, returning to 2014 to 2019 levels. So let's talk about finding some deals, and then we're just about done. Talk to people, hand out business cards at your local real estate club. Have some good real estate business cards. Don't get the ones with the little row of houses from Vistaprint. Get some that's got your picture on it, and again, offers good information. Use the internet for searches. Again, Karen did a great search for properties, and that's just the beginning. Drive for dollars. What's that mean? Well, if you've got opportunities in your local area, drive around the area, look for foreclosures. I like to see for sale or rent. That shows a motivated landlord. I love that one. And properties that have deferred maintenance. Okay. Again, for sale or for rent. Talk to bankers. Mike, we got a few minutes. Why don't you tell your story about banking and what happened with you as an investor?
Well, right now, Freddie and Fannie, they'll let you loan 10 loans, as far as residential normal mortgages. But back when I started, Frank, and you remember this, they would only allow 4.
Yes.
And so you only could get 4 mortgages. After that, they would say no more mortgages. But this is a thing, you can go to a mom and pop bank where they keep the paper in-house. And they also call this portfolio lending, but they keep it in-house. And so there's a lot of banks that don't even know that this is available. I mean, no bank will do that if they work for a big name bank. But you go to a mom and pop bank, which I did, and they kept saying, no. And finally, I found one bank that would do it out of town, up in Longmont, Colorado. I'm in Pueblo. But Frank, this is the thing. People have to be determined. Don't let no discourage you. Just go to another one. I went to so many, it got to be hilarious, you know. No. One banker just said, he laughed at me. He says, there's no bank that's going to ever do that for you. And I wanted to go back to him, but I'm a pastor, I'm a Christian, and back at him. But anyway, I didn't do that. But just for those people who are listening and watching, don't let no discourage you. Go to the next one.
Yeah, real quickly, what's the distance between Colorado or Pueblo and Longmont?
About 3 hours, a little bit less, depending, of course, you know about traffic, but it could take up to 3 hours from Pueblo to Longmont.
You did serious looking, didn't you?
I did. I did.
Okay. Look for eviction notices, offer a finder's fee if somebody, again, can't give them a commission, but you know, if somebody brings you a property, you can offer a finder's fee. Make sure you're adhering to local laws. Look for old for sale by owner signs, or ask your realtor to look at older expired listings. Find a realtor that's an expert in the area you plan to invest in, and make sure they work with investors. It's great if they have properties of their own. The guy down the street, your sister-in-law, the guy, you know, your neighbor, your brother-in-law, if they're not working with investors, you don't want them as a realtor. So you can either have the talk now or you can have it later. So if you choose them. And again, talk to your mentor about marketing ideas. Just remember, as Bill Baranchik says, if you have no leads, you have no business. Do a spiritual note, Proverbs 21:5, the plans of the diligent lead surely to abundance, but everyone who is hasty comes only to poverty. Mike, you want to finish this up for us, and then we'll attack some of these questions.
All right. Well, Frank, that was great information. And
Thank you.
I just think that, you know, this is the thing. I mean, even yesterday when Karen was talking, you know, my wife and I were having coffee this morning underneath the tree before I came to the office. And I said, you know, the longer I stay in this, you know, it just seems like Karen and you guys and Troy are coming up with just such golden nuggets. And I'm just thankful to be part of this team that even though you're doing this, you think, oh, I've been doing real estate for 5 years, 10 years, 20 years. The great thing about this, our team, we have, first of all, God that speaks through us. But Frank, Troy, this is great information. What do you have to say about all of this, Troy?
I agree. It is good information. And Mike, I glean a lot from you as well, and from Frank and Karen. There's such an abundance of wealth when you join with others that are like-minded and have a connected purpose. And that's something I've enjoyed ever since I've become part of Wealth Builders, is the nuggets that come from you guys, from Billy, and even from a lot of the people that we interact with at our events. It's just priceless. It's such a great family atmosphere, and it's so inspiring to keep going on. I think we all need to keep that connection. It's valuable.
You know, Zoom is great, but meeting people face to face like you can at the real estate workshop, it's what am I trying to say? It's
the best ever. You can't compete with that. It is. It's priceless.
All right. Anything else on this, Mike? And we'll start attacking some questions.
No, I think we're good. Are we ready?
I think so. Let me stop share here. And all right. So we have a few. Let's see here.
Yeah, we do.
Holy cow. All right. Well, we'll answer. We've got about 10 minutes here. So let's see here. Okay. Henry, thank you for asking us. What are your thoughts regarding today's stock market news, the drop being blamed on drop in housing? Troy, I'm going to throw that one to you.
Yeah, that's a great one. Now, I looked at that, and it wasn't really a drop in housing. There was still an increase in housing. It just wasn't as big as expected. And that's not a big drop in our stock market, considering where it's at. And there's also another trend that I've seen happen in the last 30 years in real estate. When the stock market starts to pull back, there's a lot of money that will pull out of the stocks, which cause stocks to go down, and then they start going into real estate. Real estate is a hard asset. And here's something that's very, very powerful about real estate. You see, when the market crashed in 2008, housing prices were falling. In fact, I owned several properties at that time, and the overall value of my portfolio went down by 65%. Frank, I see you nodding.
Yeah.
You felt
Oh,
that
yeah.
pain then too, right?
Yep.
So, but the beautiful thing about that was my rental incomes kept coming in. They didn't stop. And the most powerful lesson I could take from that was, if that property that I had as a rental, if the value fall all the way to zero, I didn't care. It still produced income, and that made it extremely valuable. So I wouldn't be concerned about what they're saying with the stock market. It really comes down to finding a property that's going to provide the cash flow. And if you're in a positive cash flow position and it loses value, who cares? You're not spending your equity, you're not spending your losses, you've got income coming in off that asset. So it's still performing, it's still doing its job. Is that right, guys?
That's right.
Absolutely.
And
Absolutely.
I can testify to this. You know, when my mom passed away, many years ago, she left some money and I invested it in the stock market. And guess what? That money that I invested specifically for that, it went to zero. And the thing, Troy, you were talking about, when your stock goes to zero, you have zero money and zero stock in that account. The people say, oh man, what about the housing bubble if it crashes? You know what? I still have a house. I still have a house. So that to me is the great advantage over the stock market crashing and the housing market crashing. I still have a house.
And there's no way that it's going to be like it was in the mid 2000s. There's appraisers, they overinflated the values of properties. The lenders, they did what we called liar loans. They did no doc loans. Means that, Troy, you could have said, I made $150,000 when you're making 10 grand a year, and they would base it on that. Well, the problem is, what happened is people were able to buy 4 or 5 properties. The first time a tenant or two couldn't pay, or the furnace went out, or the air conditioning unit, they didn't have the resources. So that is why all of the foreclosures. There's too much control on that. Yeah, we'll have some foreclosures. There will be opportunities, but nothing like that. Hey, we got one more question here, you guys. And this is a fairly long one. So are there any particular strategies, Deb, this was from you, thank you, or approaches to portfolio sales? Is it worth picking the best units for rental and fixing and flipping the others? And where is the best place to look for such offers? Let's start with that. And then we got about partnering with the owner. I mean, I will say one comment on this, and I'm going to turn it to you guys. A lot of times, if it's a portfolio sale, and you kind of allude to this, Deborah, I mean, it's kind of all or nothing. You can't go through and pick and choose. You got to take the good, bad, and the ugly. All right. Yes. Mike?
And I'll say this, as far as looking, if I understood the question right, as far as looking for houses, we tell people, if you go to the big cities, are there some gems in there? Yes. But it's going to take a lot more research to get in to find the numbers for you in the bigger cities. So if you can go to the population of towns that are 200,000 or less, you're more likely to find that the numbers are going to be better for you. So I'll say that.
Okay. And then Troy, what about somebody that's selling a portfolio of properties? I know you've bought some before, but I mean, sometimes these portfolios may be 20, 30, 50, 100 properties.
That's right, Frank. And here's the key to real estate is a very relational business. So if you're walking around just looking for a portfolio, it's probably not going to land in your lap. But if you're working on building relationships with people that own properties, attending real estate investment clubs, getting to know some of the players in the area, getting in networking with other investors, connecting with realtors and brokers that are out there. And then if you're also doing a little bit of advertising, one of my favorite things Frank pointed out on the Finding Deals slide was looking at eviction notices. You start to find those and you network, you are going to find people that have the portfolios and they're going to start to offer those for sale. Yeah. The best place to network that would be some of these realtors that have been in the business for a while. They're professional salespeople and they've got clients. They sold a lot of investment property to, and they will start to bundle that portfolio. It's I'll add to what Frank and Mike were saying though. When you do take down a portfolio, you pretty much just take the whole thing,
Yep.
but you can analyze that portfolio and decide to sell some off and keep the cherries after that. But you still take down the whole package, right?
That's right. That's right. But sometimes they offer some really creative financing on these. So here's the second part of the question: is partnering with the owner and offering 50% passive income for management and hands approach realistic offer scenario? I mean, and you guys jump in there, in my experience, they kind of want to get out of the whole deal. They don't really, most of them aren't foresighted enough that they want to take any profits other than when they sell them to you, lock, stock, and barrel. They want to be done. I mean, does that ring true with you guys, or?
Yeah, they're wanting to get out of it. So if they're wanting to get out of it, they want to wash their hands and say it's all or nothing.
Yeah. So the final part of her question, we're going to take one more from Henry. And the reason I'm going to take this is because we had part of a question we didn't answer yesterday that I'd like to answer also. But let's finish this up. What's a decent ROI that one should attain for portfolio? I have seen 8%, but this seems low. Mike?
Well, yeah, we like to see double figures, of course, 10%, but some of that depends, and we say that on purpose because it's what you think is going to be a good deal for cash flow. And as far as you look at the long-term picture as well, but, we like to see double figures when it comes to that.
Yeah. Troy?
Yeah, I agree. We do like to see double figures. 10 to 15% is a pretty good cash on cash return. So now when you talk ROI, there's always confusion between, is that my cap rate? Is that my cash on cash return? We like cash on cash return. That's actually showing what your return is. 8% is not bad because even with today's higher interest rates and CD rates, you're not going to get 8%. So that's not bad. But I agree with what Mike just said, that 8% would be a little low unless it's a brand new property and I'm not going to have maintenance, because by the time I get to where I've got maintenance, my rents will have ticked up, my ROI would have increased, and I'd be in a much better position. So at the end of the day, it's like Frank said, you got to be happy with the income that it generates.
Yeah. And the other exception might be if you have a whole bunch of properties, you're making that 8%, but you're literally making thousands of dollars a month in cash flow. So
Great
last
point.
question, and then we'll kind of wrap up. Henry asks, should I start a new LLC just for my real estate business, investment business? And again, I'm going to give you the attorney's answer. It depends. A lot of people want to get into asset protection right away. And I'm a big proponent of that because I work along with Bill Bronchick too. But it doesn't need to be the first thing on your mind. If you find a good deal and you're going to invest in it, I think you might be surprised at how quickly you can put together an LLC and get things going. So, and the other thing too is it might not just be an LLC. If you're going to do fix and flips, and again, this is kind of a boilerplate answer. In most cases, you should be doing an S corporation or an LLC taxed in an S corporation, because those are made for profits like commissions and fix and flip profits, things like that. LLCs are more for passive income, like rental income and things like that. The last part of this question, somebody asked, can I move a property after I finance it from my personal name into an LLC? And yes, in most cases you can. I always let the bank know that I'm getting this for an investment property. I'm upfront with them, and if they have a problem with it, I want to find out now. But most of them will make you buy it in your own name. So it's no problem to go ahead and buy it in your own name and then quickly put it into an LLC. But the one thing I really wanted to mention is if you put it into an LLC, make sure the insurance matches make sure the insurance of the LLC is covered with your homeowner's insurance. Okay. And a lot of times what we've done in ours is we'll insure the LLC, but my wife and I as principals will be additionally insured. That way you cover your base both ways. Troy, anything on that?
No, good stuff, Frank. It's
Yeah.
I'll add one more thing to it. A lot of times when you're buying your first piece of property, if you're going to use bank financing or traditional financing, they're going to want to put that in your name. So if you had an LLC, it's going to sit on the shelf and collect dust. It's not going to do anything for you. So the LLC, as Frank said, you can set that up at a moment's notice. The first time I needed one for an investment property, I actually had the property under contract, and my hard money lender came back and says, we will only fund this in an LLC. So I rushed out to set one up and had it ready before we closed.
Yeah.
So don't worry about doing it right away. Don't worry about the asset protection. It's always, Frank, I'm sure you see this a lot. We see a lot of people who are worried about protecting assets they don't own yet, aren't we?
That's right. But I also see, Troy, when I was doing a lot of work, short sales in Vegas, I had run across one guy that had 80 different properties. They were all in his own name.
Oh, wow.
Yeah.
Ooh.
I mean, yeah, that is an accident waiting to happen. So
that would need a few LLCs. Yeah. One or two, maybe not. 80, so definitely.
80. Yeah. Mike, any more on this? And
No, I think we're good, guys, and we're about out of time here.
yes.
And so I am just thankful for everybody tuning in today. And listen, we're going to be doing this the rest of this week, the same time, 3:00 Mountain Time. Tomorrow, we got Troy going to be talking about property analysis. It's going to be exciting. So, hey, tell your friends to tune in. You're going to be learning lots of things. So we want to say thank you for joining us, and we will see you tomorrow. Frank, you got any announcement first?
Live from Florida tomorrow. Mike, you want to end us on a prayer?
I sure will. Yes, we're going to be in Florida tomorrow. It's the property that God made after Colorado, just so you know. But
That's
no.
right.
It always makes the best last.
Oh, okay. All right. Father, we are just so thankful for the family of God. We thank you for people that have like-mindedness, making sense of making money to make a difference. I thank you for that just burning in all of our hearts, that you're helping us to be a blessing wherever we go. Father, the blessings of Abraham flow through his lineage, and we are part of that lineage. But more importantly, we are part of the lineage of the Lord Jesus Christ, and he enjoys prospering his people. Thank you, Lord, for everybody tuning in. Bless them. Thank you in Jesus' name. Amen and amen.
Amen.
All right. We'll see you guys
All right.
tomorrow. Thank you for joining.